Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is May 8th, 2012 and we are currently looking at price action on our 10-minute chart. And as you can see, I have this yellow vertical line drawn in, which is dividing today's trading session from yesterday's trading session. And as you can see, upon the open of the Asian trading session, we saw this move upward, and it tried to test this resistance at our 50% Fibonacci level at 30.66, but it had a hard time breaking above that resistance. But then from there, we began to see strong selling come in and a continuation of the selling that happened on yesterday. And for today, we saw this strong bearish movement and a strong fall in the pair due to continued concerns over some of the issues, coming out of Europe, over just the Eurozone's ability to fix and solve some of their sovereign debt problems. So then we saw this flight to safety, this move in the pair. And some of you may already know this, but of course, over the past weekend, we had elections in both Greece and France that's really creating a lot of political uncertainty over the future state of the European Union and whether or not the fiscal compact and just Euro-wide austerity in general will be supported by these new leaders and the government in Greece. In Greece's case, there's this political gridlock. There's attempts to create a coalition government, but that's been there's been resistance with that. So this is really creating a lot of uncertainty. So then many investors are looking for safety. So then they've been trying to buy 10-year treasury bonds, and the only way you can buy 10-year treasury bonds or shift your capital into 10-year treasuries is if you purchase the US dollar. So then that's what's been taking place. We see euro weakness, but also US dollar buying, and we see this pair falling for most of the day. And the pair had actually fell 84 pips from today's high, the session high at 30.67, down to today's session low at 29.83, where it found support. And from this area, we can see how price began to go through a correction and a brief retracement and found resistance at this 30.40 area. And of course, price was well contained below this resistance at 30.40. And right now, the pair appears to be showing signs of trend continuation and signs that it wants to test this low again at 29.83 and possibly head for this area of support here around 29.55. But of course, we'll see what happens during the Asian session. But if you were trying to trade and you were looking for an opportunity to enter the market on today, then you could have done so when price had reached this area of psychological support at 30.00 and retraced up towards this resistance near our 38.2% Fibonacci retracement level at 30.40. But it was not only just where our Fibonacci level was, but it was also where our 100 SMA line was. So then we can see how this was an area of confluence. This whole zone right here around our 30.40 area was a good area of resistance. Now let me go to our 15-minute chart so I can show you how that Fibonacci level was formed. Now right here at 30.40, this is where our 38.2% Fibonacci level is drawn in. And you can see how it was formed from the fall that happened from last Friday's high, I think at about 31.78, down towards this week's low at about 29.56. So then this drop here, this leg down in price is what created this 38.2% Fibonacci level. And as you can see, a few times it served as resistance, a few times on our chart. So then if I was up around this time in front of my platform, then this would have been a good opportunity for me to go short, because not only is it where my 100 SMA line is, where it's showing it as resistance, but it was also our 38.2% Fibonacci retracement level. So then we have confluence in this area. So then let me go back to my 10-minute chart. So then what I would have done, I would have looked for an opportunity to go short here, and I would have probably entered short around 30.34 upon bearish confirmation, and my stop loss would have been on the other side of this area of resistance. And then I would have entered my trade and held out into my trade until price had reached this psychological level at 30.00 and took my profit there for about a 34 pip trade. Or if I was a little bit more aggressive, then what I could have done, I could have held out onto the trade and actually took my profit when price had reached support at around 29.85 for about 49 pips. So you can see how this one entry here that was identified based on confluence and based on this being an area of resistance, this one trade entry could have produced two possible outcomes. Either you could have took your profit at the 3000 level for about 34 pips, or you could have done so at the support at 29.85 for about 49 pips. So then that was one trade entry you could have entered today to go short. But upon price reaching this area of support, we began to see a shift in sentiment, a change in direction, and there was rumors that institutions and just sovereign funds from Asia and from the Middle East were actually had offers to buy at this level to prevent a particular barrier from being triggered down here at the 29.58 level. So then there was offers to buy here from various institutions and sovereign wealth funds, and we began to see a shift in the price, or the direction of the price, and it began to go through a retracement. But some of this retracement could have also been a result of just short covering and profit taking, since we were approaching the London close, and some traders may have wanted to close out their short positions ahead of the London close. So then, of course, we saw this rally up, and it found resistance at 30.40. So then if you were looking for an opportunity to enter on this move up, then you could have done so when price had pulled back towards this psychological zone around 3000, around here. Of course, price fell down to the 30.05 level, and what I would have done, I would have waited for bullish confirmation to enter. I would have entered around 30.09 and had my stop loss on the other side of this psychological zone, and actually held out on my trade and took my profit when price had reached this 38.2% Fibonacci level, or this area of resistance at 30.40 for about a 31 pip trade. So then this is also one trade entry that I could have entered if I was in front of my platform at this time. So then, of course, right now you can see how price had a hard time breaking above and closing above this 30.40 resistance, and it appears to show signs of trend continuation, and we can see how price is making its way lower ahead of the Asian session, or the Tokyo Open. And we can see how if price continues to slide further, then it may want to test the support here at 29.83. And if it breaks through this support, then most likely price would try to make an attempt to test this low here, this weekly low at 29.56. So then that's it for my technical analysis review for today. And hopefully you guys can join us on Thursday for our next VIP trading webinar. We will be talking about some of the issues we discussed today with this technical analysis video and any current news in the market. But of course, until then, I wish all of you guys profitable trades, and I will be talking to you guys later. You guys have a wonderful day. Okay, then, bye.